I don't mind admitting that for most of my life, making a digital payment has been exactly the same thing as making a card payment. But with the rise of things like account-to-account payments, mobile wallets, digital currencies, what does the future look like for card payments? Let's find out in this episode of Navigating Digital Payments.
Welcome to the Navigating Digital Payments podcast, brought to you by Worldline, bringing you the latest innovations, trends, and predictions about the future of payments.
Hello and welcome to this episode of Navigating Digital Payments. I'm David Daly. I look after the Discovery Hub here at Worldline, and today I'm really thrilled to be joined by two fantastic guests to discuss this topic of what is the future of card payments. So we have Angelo Cacci, who is the Managing Director of Seattle's Cards and Beyond. Angelo, welcome to the podcast.
Thank you, David, for inviting me.
Great to have you on board. And a regular guest of the podcast, Ina Kostiuk, who is the Global Partner Manager for the Merchant Services part of the Worldline business. Ina, great to have you back again for this episode of the podcast.
Hello, gentlemen. It's my pleasure always to be with you.
So the big question that I'd really like to ask both of you is about what is the future of card payments? What's that looking like? But before we come on to that, I kind of wanted to get your views on why card payments have become so ubiquitous and also what new payment methods are emerging. So Angelo, maybe I can start with your view. Looking back historically a little bit, what do you think has led to card payments really becoming kind of the dominant digital payment method today?
Yes, David, it's a big question. Obviously, we should have to go through decades of history to explain such a success, and we don't have enough time. But in a nutshell, let's start first of all with the clear convenience of cards for both users and merchants compared to other payment means, especially against cash. Using a card means simplicity. Secondly, we could add that cards benefit from a large and international acceptance network for both online and offline usage. Tens of millions of shops and e-commerce sites do accept cards worldwide, and I can't imagine a traveler going abroad without this precious piece of plastic. Third, the card schemes have built strong foundations and have enhanced a strong set of rules that cope with each stakeholder's interest. For instance, in terms of security, fraud prevention and management, disputes and chargebacks. The number of issuers worldwide has strongly increased, and beyond traditional banks, today we have issuers coming from nearly all horizons: fintechs, retailers, oil companies, challenger banks, telecom operators, insurance companies. We have cards for all kinds and all costs. They can be open loop, closed loop, filtered loop. The range of cards can span from really free, low cost to premium products. And if we say products, card is a true marketing product associated with value-added services. It may be assistance, it may be insurance, cashback, loyalty, concierge, and other services. And on top of B2C cards, we have many kinds of B2B cards, commercial cards, whereby companies have a strong interest to use them to manage and monitor their professional expenses. And cards have succeeded in reinventing themselves with new technologies. 3 examples: the dynamic CVV to ensure security. Second, the tremendous success of contactless, NFC contactless embedded into the card. And third, more recently, fingerprint biometrics. And last but not least, despite the decrease of interchange fees, there is a resilient business model, which is also obviously fundamental for banks, issuers, and acquirers.
It's really interesting in your answer, Angelo. So you mentioned these three aspects: convenience, and I know in one of the last episodes we talked about a survey we conducted asking people why they choose particular payment methods, and convenience was, right at the top of the list. But also we spoke to Professor Leo van Hove in one of the previous episodes, and he talked about the fact that acceptance, exactly what you say, if a payment means is widely accepted, that tends to promote usage as well. But throughout what you were talking about there, you kind of also see that cards, whether they're physical cards or digital cards in a mobile wallet, are kind of the user interface, or they're the physical thing that people associate with making a digital payment. Can you comment maybe briefly on that, the difference between the card as the kind of user interface, the thing that the consumer sees and touches, versus cards as a kind of a settlement rails behind the scenes?
Yes, before to do that, to add an additional comment of what I have just said, we have convenience, we have security, and we have trust with cards. And this is an asset cards have got, which today still makes the difference. Getting back to your second question, the piece of plastic is indeed the visible part of the iceberg, right? And when we consider cards, again, we have many considerations. The marketing mix approach, a brand, convenience, speed, security, and added value services. That's the reason why billions of people, from teens to older people, they don't wonder whether it works. It works, and they use cards in all circumstances. If we look at the invisible part of this nice mechanism, it is the merit of card schemes, their members, their partners, to have built a comprehensive and solid ecosystem, which gathers a wide range of stakeholders. We have the cards and the POS manufacturers, we have software vendors, we have processors, we have obviously banks, issuers, and acquirers, until the indispensable clearing and settlement platforms. And the most famous ones are the so-called four-corner models, the likes of Visa, MasterCard for international schemes, or we can also mention Carte Bancaire, the leading French domestic scheme. And these models, they have demonstrated their ability to adapt to new regulations and to new habits. If you consider the boom of e-commerce, it has strongly benefited to the usage of cards. The card schemes have also had to cope with new directives, the European directives, until the PSD2 and strong customer authentication. It still works. Contactless usage, now it has become really obvious compared to 10 years ago, but now more than half of all transactions are made contactless. And getting back to your previous remark, even if we pay with our phones, in many cases, not always, but in many cases, there are cards behind the scenes which have been previously enrolled. And this is notably the case with Apple Pay, Google Pay, Samsung Pay, and other host card emulation-based solutions. So, with cards, you pay in many occasions, and we have still maybe to invent other form factors which will be used, but behind that, the card rails will still be used.
And there's two interesting things in your answer that I just want to reflect on there, Angelo. So the first thing is that you mentioned some of the evolution of cards, and you mentioned that in your answer to the first question as well. And I think it's so right, isn't it, that we tend to think of card payments have been around for whatever 40, 50 years, but the card payments that I remember my mum and dad using, which was literally the embossed number and the little machine that would take a copy of it fully offline, that is a world away from the card payments that we're used to now. I mean, it really has transformed itself, if you like, over that time. And then, as you say as well, in mobile wallets, often it's a card payment behind the scenes. But even if you have to fund an account, then often it's a card payment used to fund a particular, like a closed loop system. So they're still very prevalent, even when maybe the physical plastic card is not being used anymore. That's really interesting. Ina, maybe I can come to you now to get the view of what you see with Worldline's partners and our clients. How are they perceiving card payments today?
Well, guys, first of all, after such a good briefing into the history of evolution of the card payments, we could definitely say that our clients, partners, facing very fast change in reality, and definitely they need to cope and adjust. If I'm very honest, if I would be a merchant these days, I would be very stressed because of any kind of changes its payment ecosystem is bringing. Plus, as Angela mentioned, the different type of people, different generation has different preferences to tackle it. And but from what we see with our partners and merchants, what they want is actually to have the resource to digitalize all data. So for them, definitely it's preferred option anyway on a digital payment. Yes, of course, they choose a secure way. So card, of course, is very favorable. However, other alternative wallets are also welcome. Google Pay, Apple Pay, and PayPal. Especially on online payment. So it's definitely very popular at the days to use them. Nevertheless, we also facing the reality that new generation like Gen Z, they prefer not to have physical attachment to cards. So, but it doesn't mean that card gonna disappear. Cards just gonna move towards, let's say, virtual way, or it's not going to be a piece of plastic in your pocket. It's going to be enrolled on your phone or on your watch, and it's not going to be visible as now. But the rails most probably going to stay because, as again Angela mentions, there is so much integration and involvement being done between different schemes, between point of sales, between different operational systems who operate that. So there is no possibility that it's going to change in one day or over the night. So it's definitely going to be there for a while.
And I guess, I mean, it relates a bit as well to what Angelo was saying, because Angelo, I think you said, people just expect their card payments to work, and they do. But there's quite a lot goes on behind the scenes to make it work. And actually, it's not automatic that you can accept Apple Pay or Google Pay or PayPal or whatever the next payment method is. And for merchants, that's the headache, because as a merchant, from what you're saying, Ina, you want to make sure that if someone wants to pay you, they can with whatever their preferred payment method is. That's your goal as a merchant.
And that you as a merchant, you will receive the money. So it's not just somebody pays, but you have a guarantee that to receive your money. That is a merchant paying.
And I think, because also, Angela, you mentioned that as well in terms of trust, didn't you? And again, I think it's something almost so it's been around for such a long time, we almost take it for granted that as a consumer, you have a certain level of protection and confidence that when you pay with a card, you will receive the goods. And as a merchant, you have a certain degree of confidence that you will receive the money for the goods that you've supplied. And it's become so inbuilt that it's easy even to forget, I think, that is a feature of cards. But of course, it totally is. Without that, the whole thing doesn't work. So I guess we've started to maybe talk a little bit about some changes when we talk about wallets, PayPal, etc. Angelo, maybe I can come back to you and you can talk a bit more about what alternatives to card payments are now on the horizon or have started to appear.
Yeah, with pleasure. First of all, I would like to recall that there have always been alternatives to card payments. If we consider cash, for instance, cash is not disappearing at all. Even in some major countries, if we look at Germany, which is close to us, German people are found to cash. Cash is still dominant in a lot of emerging or semi-developed countries, and it's very hard to fight that dominance of cash. And in those emerging countries, yes, we have to admit that card is, let's say, having difficulties in growing the number of payment transactions. Where in those countries cards are used, mainly they are used for cash withdrawal. So you withdraw cash and then you use cash. So it's a little transfer, but cash is still dominant. Obviously, beyond checks and cash, some countries have seen during the last decade the rise of mobile-based solutions. From, let's say, some basic functions like mobile money in Africa, and obviously in Africa they have made a significant jump from cash, which is still dominant, until mobile-based solutions. Everyone knows the big success of M-Pesa in Kenya and other surrounding countries, of Orange Money and the other solutions promoted by the leading telecom operators. But we can even go until more sophisticated value propositions, and I think obviously of Alipay and WeChat Pay in China, which have become true super apps. Going through those solutions, we can do nearly everything you want. So, considering the challenge for cards today, we also have to mention the solution based upon account-to-account, real-time payments, and more the solutions enabled by open banking and payment initiation. In some countries, we also have to say that beyond cards, paying via direct debit or credit transfer has been appealing. If we look at the Netherlands, everyone knows the success of Ideal, promoted by the Dutch banks for about 15 years. They represent about 7 out of 10 online transactions in that countries. Other examples of successful mobile wallets boosted by account-to-account transactions are the ones in the Nordics, Swish in Sweden, Vipps in Norway, MobilePay in Denmark, but we can also add Twint in Switzerland, Blik in Poland. Those services are regularly used by millions of users. However, they have not killed the card. If we look at the statistics in Norway, a Norwegian adult uses the card about 400 times a year. 400 times. And in the same country, the Norwegian people are also using Swish, the mobile wallet solution. So they are living together. One is not disappearing, especially the cards are not disappearing. And also consideration is the strong potential of payments made through open banking. And it is a reality in Europe with the second Payment Service Directive, but we are only at the beginning of the story. A lot of major countries have indeed implemented the framework. We have many PSPs and fintechs which have set up proposals to enable merchants to accept those kinds of payments, including Worldline, to mention at least one, but there are obviously many others. UK has a powerful open banking infrastructure, probably the most advanced in the old continent, in Europe. And if I remember right, the stats of December show that about 7 million people have used open banking transactions, open banking payments in the UK, with close to 8 million transactions in a single month. So obviously, it's not so much compared to maybe the 2 billion transactions of cards payments made in a month, but okay, the figures are growing threefold a year. And last but not least, obviously, we have to take account of the promise with cryptocurrencies and especially central bank digital currencies, which could become maybe the payment method of the 21st century. But there are many, many hurdles to overcome. There is reluctancy, there is resistance. Habits don't change rapidly, so we will have to be patient.
Indeed, our space is really flooded with the alternative payment method and various initiatives from the regulatory point of view, from the fintechs, from merchant needs as well. And as you mentioned, there is a huge opportunity for all type of collaboration within open banking initiatives. Yet, I believe we are in a very early stage because not every country has the same level of education about it, not the same level of openness or acceptance of it, and even some countries are not really aware about that initiative and how it's not talking that how it could help them. So it's really some educational approach from the market we will follow before it will get a mass stream. Yet, I think it's last 5 years when we see significant increase in alternative payment methods, really jump of use of it. However, the markets like in Asia have been already dominated for a while with the like WeChat option. And market like Europe and America, we are very traditional. So we are following our traditional card use approach or something alike. And yet we underestimate that there is a huge unbanked population, which in more developing countries, in Africa and Latin America, where they cannot physically even pay for a card, even debit, not talking about credit. So for that reason, in these countries, they really leapfrog with alternative payment methods, especially using telco, as Angela mentioned, and mobile payment. So for them, it's also partially inclusion into the financial ecosystem on the way, especially when it's talking about rural areas.
Yeah, I agree with you, Ina, because indeed, when we consider payments, we have to take account of geography. And it's not the same story if we consider major countries, emerging countries, north to south. And we have seen that there might be accelerations in a few countries whereby there are some inertia in others. And we have to recon that and say, okay, it may be quick in a few cases, and it can be very much slower in others. And it's not always easy to replicate the success of one alternative payment method to other geographies. Everyone would have dreamt to build a WeChat Pay, an Alipay in Europe and in the States, but no one did that.
I think you're right, Angelo. It can vary a lot by region. Also, we had a previous episode where we talked about the impact of regulations on innovation in payments. And we noted then that something like PSD2 has been around 5 years, and it doesn't happen overnight that suddenly you get new solutions and adoption of new solutions. But also, because you mentioned the UK, I just see it, in my daily life. Now it's possible to pay your tax with an open banking PIS payment, and so it starts to kind of creep into the way that people are doing things. But you mentioned a few different examples of alternative payment means. Do you have kind of a view on which of those are proving most successful, and maybe why they're becoming successful?
Yeah, indeed. So I have given a few names of successful wallets in China and in Europe. But if we now consider real-time payments, we have to mention UPI in India. launched in 2016 and supported by hundreds of financial institutions. The UPI system today is generating over 7 billion transactions a month. 7 billion transactions a month with no equivalent on earth. Obviously, we are talking about India, which is now the biggest country in the world, but nonetheless, the figures are really impressive, and they started 7 years ago. We can also quote its equivalent in Brazil, PIX, launched in November 2020 in less than 3 years. So PIX has reached close to 140 million users for 2.5 billion transactions a month. So again, tremendous figures in a quite short period of time. So it's really a strong example of how an alternative payment method can become mainstream. So why such a success? Because it is interesting to see why it has worked. First, a strong political willingness and support. So the government has said, redo it. They have done it. When I say they, I mean all stakeholders, and especially the banks. No fees for the end user. It's free, so no barrier for the usage, and a low cost for the merchant, for the business. So because it has to be competitive compared to other payment mechanisms. Easiness of use, it's really easy to register. It's really easy to use it via your smartphone. The real-time nature, of the transaction. So in a few seconds, the payee has got the money and can use it how he wants. And the 24/7 availability. So always available, always on. And even if cards were already introduced in those two countries, India and Brazil, cash was still very strong, and there was a void to fill in order to improve financial inclusions. So in the end, to make it successful, you need a strong combination of reasons. It has worked in India, in Brazil. It doesn't mean we will have the same virtuous circle to make it happen in other regions. We will have to see that in the coming years.
And moreover, I believe in other regions it's not going to be as attractive, because first of all, the list of combinations are not the same, and for small merchant, it's so crucial to receive money immediately that it was one of the key to adoption in Brazil or India, this alternative scheme. And that is not really culture, at least in European countries. So that's why it might take longer and less speed of such adoption.
But I also think it's interesting what you mentioned, Angelo, about political will to make PIX and UPI happen. Because, of course, when we looked at the numbers, a lot of the success of UPI and PIX is cash displacement. So it's not people giving up their cards and using PIX or UPI, it's people switching from cash. And, of course, the governments have a strong desire to reduce cash usage because there's associated tax avoidance and crime implications for a high cash economy. And this is, of course, why it's so different in different geographies. But in much of Europe, there wouldn't be a strong government drive to switch to a new digital payment means from cards, because cards are not causing the same issues that a high cash-based economy is causing. If I understand you well, you're saying you can't necessarily just assume because one thing worked in one country that'll be the next big thing in another country, because cultural attitudes will be different, but also the starting point will be different.
Absolutely, indeed. We have seen with SCT Inst that the figures have not become immediately big. So I think we are now close to 11-12% of all SCT which are instant. So no one is in a hurry, to go there. The current payment methods do the job, whatever we think or whatever we would like. So it works. So we'll have to progressively change the habits, ideally find a piece of business model to entice stakeholders to accelerate. If not, they will be keen to preserve what they currently have. So it's a question in the end of trade-offs.
It's interesting you mentioned instant payments. Ina, you mentioned the importance of instant settlement as well. And I find it's amazing in the UK how now I've become very accustomed to payments being, I mean, they're guaranteed to be within 2 hours, but they are usually within seconds. And so if I pay for something on behalf of some friends and they all pay me back, I mean, the whole thing is done in 5 minutes. And there's no need in 3 days to check that a transaction went through or did I receive that money or not, because it's all finished very quickly. And it's amazing how once you have that, it seems amazing and brilliant and you wouldn't want to go back. But if, I remember 5 years ago, I also wasn't missing it. It's great to have it, but it doesn't necessarily, I think, mean that people start adopting quickly when they don't know what they're missing out on. But have you seen other views or reactions from our merchant client base to alternative payment means?
Absolutely. And again, I'm coming to the same topic, maybe not so pleasant. As I'm a merchant today and a big one, I would be quite stressed because of all the alternatives of payment method across at least Europe, not talking across the globe, and the fact that you need to integrate with all of it. It actually takes a lot of that attention because what's their goal? To get money in, and they need to provide you means to that. So they adapt, they integrate, but definitely they require a lot of support and they require a lot of advisors. So what is my role and my colleagues' role is actually to say what is the best way, where to start and how to integrate. We see in many countries, as Angela also mentioned, in the Netherlands, ideal is like 85% of population using it on a daily basis. So there is definitely, it's a core acceptance scheme. However, you cannot neglect all others because you have other type of clients who are just cards. So all of it, it's definitely a way to serve your clients, to get money in, and a merchant is definitely willing to do that integration and to adjust. Nevertheless, for some specific like HoReCa business, we also have meal vouchers tickets. You can also consider it on a very alternative method of payment, because when you go to a restaurant, you expect that you can pay for lunch with your meal vouchers. So there is a multiple layer of complexity behind any kind of accessibility of alternative payment methods. We are making sure that we can serve our clients with that, but in general, for merchant, is not always easy. That piece, and they're facing a lot of uncertainty how to accept payment the way customer wants to pay.
I may be oversimplifying because, Angela, you mentioned that there have been alternative payment means around, for many years already. But I do think for merchants, it is on one level a headache. Actually, if everyone is either using cash, check or cards, then you have 3 payment means to accept, and it's simple. If they expect to be able to use WeChat or Alipay or an Apple Wallet or a Google Wallet, as a merchant, you have more payment methods that you need to be able to accept. So in a moment, I really want to finish off by coming back to both of you to see what you think the future of cards looks like. But before I come on to that, let me just remind people that if they want to get in touch with us and propose future topics, give us any feedback, then you can reach us by emailing ndp-podcast@worldline.com. And also just to remind our listeners to please, if you haven't already, take a moment to subscribe to the podcast and leave us a review and a rating. So perhaps, Ina, I can start with you by asking you with merchants, do you see that they have a big appetite to move away from cards, move to these different payment means?
Merchant want simplicity. They don't want to move anywhere. They just want the thing works. So definitely it's not the merchant who will drive the market. So definitely it's consumers who will drive the change. But also what we see on the market, everybody understands that payment getting is a commodity. So it needs to be done a simple way as possible. And it doesn't matter if it's alternative payment method, traditional by card or cash, but it should be done simple. And the integration layers should be reduced to minimum. That will drive the business in the future. So that would be my takeaway from there, and I don't see the card would disappear anytime soon. They might turn more towards digital, especially with the Gen Z generation. So I think it's going more that way rather than disappearing. Even if wallets are gonna be dominant as of in a few years already, we expect them to take more than 52% or as a payment means in the market worldwide. Nevertheless, cards are gonna stay. It's still convenient for many people, and we are gonna use it maybe differently.
It's a really good point, Ina, you make that, of course, payments for any merchant always has to be integrated to other both business processes and technical solutions. And of course, merchants don't want logically to have to do a separate integration for every single payment means that they implement. So, Angelo, maybe now I come on to you and ask what you think the future looks like for cards, where we're going to be in 3, 5, 10 years' time, or beyond if you want to go further than that.
Yeah, I'm taking my crystal ball. So I would say that despite the advance of new payment solutions like super apps, wallets boosted by account-to-account real-time transactions, or despite the bright future of cryptocurrencies, I don't see a quick decrease of the card's dominance, at least in the countries where the card is the preferred payment method so far. And I'm talking about, let's say, the major countries in the US, in Europe, in some Latin American countries or Asian countries. The number of cards issued is always growing year on year. And this is exactly the same for the volume of card transactions. So that's reality. So you can't contest the facts. And on top of that, issuing a card has never been so easy thanks to those new companies surfing on the wave of banking as a service, embedded finance. So in a few weeks' time, anybody, any company, a small one, can issue a card for whatever purpose. On top of that, a lot of stakeholders are still benefiting from the cards business, and they have no immediate interest to jump onto another horse. Don't also forget the weight of habits in consumers' behaviors. We have been talking about cashless societies for a long time, and cash is still here. Checks in a few countries, especially in France. So we are issuing 2 billion checks a year. For many years, I have heard that cards will be strongly impacted by new payment methods, but sincerely, I can't see immediate risks. Nonetheless, we have to be conscious. In emerging and semi-developed countries, we can wonder, we can asking ourselves whether the card's usage will reach a decent level of market share or if it remains secondary or even marginal for the benefits of other instruments, and especially the ones we have talked previously, like UPI in India, PIX in Brazil. And one point also which is very important when we are talking about a new payment instrument, it's the sensitive problem of the chicken and egg situation. You have always to have on one side many users, many issuers, and on the other side many merchants which can accept those payments methods. And ideally with some efficient business model in the middle. If not, you will have some parts of the equation which won't be perfectly solved.
And as you say, it's the classic chicken and egg, because who wants to accept a payment means that no one is using to pay with, but also who wants to pay with a payment means that no merchants are accepting. So how do you get an ecosystem like that started? And it's not a trivial challenge, is it? And I guess what's striking in your answer, Angelo, is precisely that it may not be so much that cards will disappear in geographies where they are already highly dominant, but maybe they won't grow in or grow so much in geographies where they are not already dominant. And on that, do you see any kind of sort of timeline for those changes, those evolutions?
Yeah, I can try. I can bet. In the developed countries, we could possibly see an inflection point in the cards development within 5 to 10 years, especially if the wallets based upon, for instance, real-time account-to-account transactions become mainstream, not only for P2P transactions, because today a strong part of those transactions are for P2P, but if they also cover B2C transactions. We have seen a significant breakthrough in China, in some South Asian countries, in some Western European countries. US banks have launched Zili, which is very much successful for P2P, and possibly they could extend its reach. In Europe, or at least in some European countries, we have EPI, European Payment Initiative, which is based upon SCT INS. If EPI works in the long run, yeah, possibly it could take some market share to the detriment of cards. But again, we need time. Changing habits takes time, and nothing will change before 5 years' time.
So that's a firm, concrete prediction, Angelo, which we always appreciate on the podcast. So I think just to wrap up, I mean, it's been a really interesting and quite deep discussion, I think, starting at looking the history of cards and the rise of cards and how they've become dominant in many geographies, and then looking at some of these alternative payment means, and particularly the success of schemes like Pix and UPI in Brazil and India, but then with the caveat that just because some alternatives to cards have taken off in some quite large geographies, that doesn't automatically mean there's going to be a big shift to similar schemes in other geographies, because the starting point is different, the culture is different. And then finally, on to that point of predictions with Ina, you kind of saying, well, the drive is not, the push to change is not going to come from the merchant side. Angelo, you highlighting this chicken and egg difficulty, really. You need consumers onboarded, but you can't onboard consumers if there are no merchants onboarded. Merchants are not interested if there's no consumers onboarded. But also you're saying, and I think we've seen that in the history of payments, that the change in habits is really not something that would happen overnight, even if new payment methods become available and are launched with an appropriate business model that means that all parties are interested in providing them. So, as I say, it feels like we've covered a lot of ground there. I do want to thank you both so much for joining us for this episode of the podcast. Angelo, thank you.
My pleasure.
And Ina, always great to have you with us on the podcast. So thank you again for joining us.
I'm delighted to have an interesting discussion always. Thank you.
And that just leaves me to thank you, our dear listeners, for joining us again for this episode of Navigating Digital Payments.
Thank you for listening to the Navigating Digital Payments podcast, brought to you by Worldline. Join us next time to learn more about the latest innovations, trends, and predictions for the future of payments.